Morning, Market Chameleons. Happy, what day is it? Wednesday morning? Is it Wednesday morning, D?
Wednesday morning, Will. Good
Woo!
morning.
Halfway through the week. Wow.
Yep.
Good morning, buddy. What do we got on tap for today?
So I think what we'll do is continue on yesterday's example of looking at open interest and volume on specific option contracts. But I did get some, and I do get questions coming in sometimes, in the emails throughout the day. And if Jake's out there, Jake's always comes out with good questions. If he wants to come on, ask the question, he it was a kind of like a long email. He had snapshots and stuff. And I know here he goes, he's got a ton of questions. I think so it'd be worth looking at it because it's a good question. And I think people will run into it. It's from experience. What I like about it is he's seen something. It's unusual. He has a question that I think other people would run into. So we could definitely take that question. I'll continue on the open, volume and open interest tomorrow, if that's okay, but it's a good question because it's from experience, right? Somebody, you experienced some trading, you've seen some kind of strange things going on in the marketplace. And I think other people will experience from it. It had to do with the stock that's been like in the news, very volatile, a lot of unusual option volume going on. I took a quick peek. I didn't do I actually only read it this morning, like kind of scanned through the email. But if Jake wants to come on, kind of ask the question, we'll take a look at the stock. We'll take a look at, the surrounding circumstances and, try to kind of go through the example. Okay.
So just so I understand, Jake sent you a big email and he's going to come on and talk
if he wants to come on, and ask the question, then we'll, I'll bring it up. I'll kind of try to go through it again. I read it. It's a stock that has been on unusual option volume. I haven't really been following this particular stock. It kind of popped up there. I skipped it, for various reasons. It didn't hit any of my conditions, but it looks like maybe Jake was interested in it. So I'll take a look at it closer. I'll explain to you why I just skipped it, on my own. It didn't really jive with what I'm used to. But I think it's just an interesting question because I think people will run into this. Okay.
All right, great. Sounds like a great episode.
I'm going to share my screen.
Well, let's do the disclaimer first. Real quick.
Sorry. Yeah, let's do the disclaimer, everybody. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent.
Let's get started. So while I'm waiting, if Jake wants to raise.
Jake is already, just so you know, this is completely organic. We didn't organize anything with Jake. He has been on the chat. So he immediately raised his hand to ask a question. So Jake awesome. Is ready to go. So once you go through the pre-market, we'll hit Jake right up.
Yeah, exactly. We'll hit Jake up. And this way we could kind of just hear. It's good to hear somebody's, when they're looking at something, right? When they're looking at a trade or trade setup, you kind of just want to sometimes just listen and hear, like, what was the logic behind it? What was the thesis behind it? What were you looking at? And then we'll take it from there. Okay. So, right now I'm just going to go pretty quickly. This is how we usually start the report. We just look at the pre-market movers, and then if Jake's there, we'll take the question. So here we go. Pre-market movers. These are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. We got 60 that made our percentage gainers list, 53 on a percentage decliners list. So from that, I would say it's kind of a mix at the open, pretty even there, slightly maybe favorable more towards the bullish side. I'm going to take a look at the higher market cap stocks, see if there's anything different there. So on the higher market cap stocks, hold on, let me just refresh my screen. I think it just goes stale when I kept it up too long, but Let's see if there's something different in the higher market cap stocks, 20 billion or higher. There we see 13 on the percentage gainers list, 16 on the decliners. Again, mixed bag. They're not big lists, but slightly more on the bear side than the bullish side. So Jake, if you're ready, we'll take the question.
All right, let me pull Jake over.
Yep.
Jake, I'm clicking you over now. Here you come, buddy. Jake in the house.
Yeah, Jake, I think.
Hey there, guys, you there?
Yep. Hey, Jake, how's it going?
Yeah, cool. Just had to shut the door. My daughter just dived in and wanted to play and stuff. But hey, yeah, great to see you guys. Yeah.
Yep.
So,
Thank you.
wanted to discuss. So, I popped you an email, Dimitri, regarding SPRT, and we'll just click through that straight away. But before that, I'm kind of the custom you love to hate, because I'll go through. I spend a lot of time on MarketChameleon, and then when I see stuff that doesn't seem to be working right, I'll flag it and stuff. Having said that, would like to start with a big congrats rather than go through the negative, well, not negative stuff, but the things that can be improved. I also went through the unusual options screen. I think I do that all the time, and I popped you an email back. I think about 3 days ago, and I put it on the Discord as well. And I said, hey, everyone, check out GSKY. Got huge unusual options activity and stuff like that. Well, that's just popped 50. That's just popped 50%. So that's up like big time. So I'm not all angry and stuff. I'm actually quite happy, because that's just a ton of cash.
So the funny thing, and I'll tell you, Jake, you sent me an email on GSKY, not on SPRT, but on GSKY, and I did tell you that I took a look at it and I did do a trade in there. So thank you for that. So
yeah, I loaded up on a big time. All my Christmases have come at once, basically.
Right. Yeah. The SPRT, you didn't email me on this one until I think yesterday. You saw something, you emailed me, I kind of, because I was reading it in the morning, so I saw SPRT. It was a long email with snapshots, so I kind of had somewhat of an idea of what you were looking at. But I did look at SPRT because I saw the same, I think it's been popping up on the unusual option volume.
Well, listen,
and
before you get going, just so everyone knows, Jake mentioned the Discord. That's available to anyone. Jake he said he posted on the Discord. That is actually run by Jake and Raj and a couple other chameleons. It's not an affiliation with Dimitri and I, but obviously it's a valuable place where information is discussed. So if you want because we have a bunch of new chameleons on today, anyone can get a link to that Discord and join Jake and the fellow chameleons on it. So just email me at williammcbride@gmail.
And I just to add on what Will said, I do a lot of research on MarketChameleon, and most of the stuff I do, I will generally post on the Discord. And if you go on the Discord right now, I've actually put the announcement that Goldman Sachs is taking over GSKY and the stock's up 50%, et cetera, et cetera. But I've actually linked that to the unusual options post I also put on the Discord from 3 or 4 days back, when I actually did I cut it out of MarketChameleon. I said, I like this, guys, and I loaded up on it. And then I think Goat dived in, a few of other guys dived in or whatever. But I got lucky on that one. But anyway, look, let's bring it back to SPRT, because this one's kind of been a bit of a bugbear for me. Nothing major, but I kind of spent a lot of time on the different scanners reports and the platform in general. And this one just keeps springing up at me, right? So when I go on to the credit put spread screener, which I think you're on there, Dimitri, generally I'll use your filters, because I think your filters that you've pre-designed are actually really good and they work really well for me. So I'll generally go, you can mix it up the way you want, but I'll generally go best by theoretical edge plus 70% win rate. And once I've loaded that up, I'll then actually just do a sort, and I'll often try and sort by the biggest theoretical edge. Okay, so I don't really sort by win rate. I'm kind of more interested in the theoretical edge. I know how you do it and how you do that calculation by doing the back test and looking at the data from the past to try and calculate that theoretical edge. So I'll scan by it. Okay, so I've done it for the last 3 or 4 days, and every day I've had SPRT pop up, and the guys in the Discord can go and see that as well. because I posted on that as well and said, hey guys, theoretical edge, 140%, 98% win rate, big numbers which, kind of blow it out of the park numbers. And you think to yourself, wow, this is unusual, right? And so I put on a trade on that a while back, 3-4 days, deep underwater, no big deal because I'm managing my risk. I'm doing everything you do, the 1%, etc. So I'm not crying about it. But the thing that's kind of the bugbear for me is the following day I go on the screener and it pops up again. And this time the stock's already lost 30%. And as all that it looks like to me, all the system has done is lowered the strikes. And you had roughly the same theoretical edge and you had roughly the same win rate. So I said, hey, I'm going to do something stupid. I'm going to do the same thing. I'm going to follow the chameleon. I'm going to put on the exact same trade 2 days in a row, both now deep underwater because the thing's tanked. It's a SPAC, etc. Dilution. You know the call. Anyway, 3 days in a row, I turn the thing on, do the same thing. Again, it pops up. This time the strikes are no longer 22 and 18. They're now $11 and 8 or whatever. But the numbers are roughly the same. And I'm like, nah, this can't be right? So I'm kind of starting to ask myself questions about the screener, which I kind of put on an email to you. And the things that I'm kind of, not concerned about, but the questions I've got are, is that screener factoring in, the weighting of the price action, the most recent price action, is it factoring that in? Because if you look at this stock, it has been on a 3G dive to zero, essentially from, I don't know, it's a SPAC, okay, so I get that. It's gone from $60 to now it's about $11 or $8 or whatever. In the space of 3 days, this thing went from $22 to 11, or it's lost half of its value. And if you go and look, I've got the screen, you go look at the implied price change, and you've got that graph there, the market implied price change versus actual price change. And you've got the days inside the absolute value and the days outside the absolute value. Well, this thing is being read for the last, 1, 2, 3, 4, 5, 6, 7, 8 days, right? And not only is it being read for the last 8 days, but it's been like down 10, 20, it went up again 10, 15% or whatever. But what I'm trying to get at is I'm not sure this screener is factoring in momentum. That's my first point, right? The second thing I've got where I'm kind of questioning is the log normal returns around equity prices. And what I mean by that is, you guys know stocks are bound by zero and infinity, theoretically, right? But when you've got a stock which is worth $100 and it loses 10%, and I'm now down at $90, for me to get back to 100, I need to make 11.111%, right? It's not the same thing. So this screener, every day this stock is going down considerably, this screener is still saying 98% plus 140% theoretical or whatever. I think that theoretical edge should be weighted heavily to the downside, right? The other thing I've got where I think it could be an improvement point or whatever, and I got caught out here, is SPACs. They're very specific, right? Because they have, particularly when they find a company to merge with, they have a dilution effect, which is phenomenal. And this is what's happened here with SPRT. Last Friday, they agreed a deal, and automatically you got this dilution kicker coming in, which essentially put the 50% off the stock, so to speak. So it really had a big impact on it. And I don't think the screener saw that either, or it didn't even, I don't know if it flagged up as news or whatever. Maybe I should have checked it or whatever, but yeah, it definitely wasn't in there. So, and it moves really quickly as well. So the last point I've got, and I made you on the email, is, and I think I've mentioned this before, I'm not a big proponent of real-time data on a platform like this. I don't think you need it, right? Because if you're doing 1 month trade, 3 month trade, or something longer, you don't need real-time data. But here you've got a SPAC, which is moving big time, right? Really quickly during the course of the day. That screener there on bull put spreads, and I saw it last night, it's calculating at a price level, let's say $20 or $21 or whatever, a couple of days ago. I look at Interactive Brokers, the stock's already at 18, right? And this thing's still saying to me, well, the 2016 spread is 98% success rate. So for me, there's something there which is missing. And that's me done for the day. Sorry, guys.
All right. So a couple things, I'll talk about. So the way I understand it is, you looked at SPRT, you saw unusual option volume, you took you went to the bull put spread screener, which is a bullish bet, right? And you didn't go to the call spread, you went to the bull put. So here's a couple of things.
SPRT. I didn't go on the unusual option volume at all. I didn't actually detect any unusual option volume there. I just went straight to the bull put spread screener. And this was, I guess you're trying to figure out why I chose SPRT. This wasn't anything like me going through the finance, this wasn't a long-term bet. This was what have we got punctually, which is a bull put spread, which will be 1 or 2 weeks, very punctual trade. So in terms of doing all the data,
let me ask you this, Jake, when you went to, why did you decide though, because bull put spread's obviously a bullish bet, right? You're not expecting the stock to fall. Your expectations, when you put it on, no matter what the edge is, right? When you put it on, you're expecting it to either, depending which strikes you do it, to stay the same or go higher. So why, in SPRT, what led you to the thesis that the stock will go higher?
Pure macro, Dimitri, in terms of, so again, I didn't dive into SPRT and look, and that's my fault, find out in detail about the company or whatever.
Because you did look at, I understand you looked at the statistics and data, but you're still taking a directional bet unless you're hedging your delta.
Agreed.
So if you're not hedging your delta and you're taking a directional bet, there needs to be a thesis why you think the stock will either stay
macro,
the same.
So there wasn't a thesis on SPRT specifically, Dimitri. I start off when I develop a position in general, I start off high level macro, right? If you look at the US capital markets recently, I think we've been on a 2-week kind of downward glide on the S&P 500, IWM, the works, the Dow Jones, etc. So we've been trending slightly down, nothing major, but I was looking for short-term contrarian plays without specifically saying I want SPRT or whatever ticker. I was just saying, okay, market's going down. It was down yesterday. It was down the day before. Last week, it was down 4 days in a row, right? So we're kind of in a bit of a bearish kind of trend. And me, it was just purely a contrarian play. What can I find punctually, short-term, no big risk, because it wasn't really a big risk for me, that is going to work. And this one just didn't work. That's all.
Right. So, I mean, right now I just popped it up here. What I just find interesting, again, I didn't follow this. I skipped it. I think it popped on my radar for being unusual behavior. I took a look at it. I skipped it. I'm just taking a look here, where it started. And what's interesting to me here is like, look, when you look at the volumes here, the volume during the day was much heavier to the call side than the put side. But when I look at the corresponding open interest, I see the put open interest growing much faster, which is saying to me is that the puts, the people in the puts are much more committed, right? They're not getting in and out of positions. They're not day trading. They're much more committed to their positions than the call, even though overwhelmingly, the call, even, volumes in the call are much higher, right? Almost 2 to 1, right? So that's interesting right off the bat to me. Now, really quickly, before I go to that screener, I just want to kind of make a point what we're looking at when we look at theoretical edge, and because we're using benchmarks, right? Historical benchmarks to kind of guide us. How are the odds today setting up with what historical odds are suggesting? So I'm just going to pull up here. Let me just pull up a notepad before we look at that. And we'll say like this, I'm going to step away from options. So it kind of makes more sense. But if I'm trying to determine, football team A, team B, right? And I'm saying, well, who's going to win? I don't really know. Right now, my guess is 50-50. I can't handicap it if I know nothing about it, right? But if I know that, and I'm just going to make up some numbers here. If on average, when they played, team A scored 30 points, team B scored, 20 points, I could start handicapping, or team A won 6, team B won, team A, let's say, won 6 games, team B out of 10, team B won 4 games. Now I'm getting a historical perspective. Who's better? How do I handicap it? So if somebody gave me even odds, I would say, okay, well, with even odds, I think team A, right? At this point, in my opinion, there's a theoretical edge based on historical data. I don't know who's going to win, but that's what I'm looking at. Okay. Now, let's say somebody's saying, well, you know what? I'm going to give you team B, has to win by 6 points, right? 6 points. Well, if somebody's giving you those odds, you might say like, hey, that's some serious theoretical edge, right? Because I think team A is already better. And now you're giving me an extra 6 points. So team B not only has to win, but they have to beat them by 6 points, not 1 point, not 2, by 6 or more. So that's how theoretical edge is, because we're using historical data to compare it to today's markets.
Sure.
Now, as a trader, it is your responsibility to manually see what is different today from historically to see if that makes sense. So what I mean by that is, right now, our theoretical edge, my theoretical edge, Jake, your theoretical edge, or anybody watching here, is that extra manual step you have to take that a computer cannot perform, right? To assess the data. So you need to do some logical steps that a computer cannot easily do. Because if a computer could easily do it, that will be already exploited, right? We could all just write an algorithm for it. So what's going on here? Why are people giving us 6 points edge? Now, it could be that just this, wherever team B is, let's say, I'm just making up New York. Those people in New York just tend to bet on their home team. They're, big fans. They're big gamblers. They like to take risks. Wall Street, blah, blah, blah. They're betting on team B, and that just skewed the handicap.
Yeah.
Which could be okay. That could be okay. Then you're like, okay, if I know that information, that's my assessment. I'm still willing to bet on team A because I think it's a better team. And I understand that information in front of me. But let's say something else happened. What if team A, the quarterback, got injured? And the quarterback is 80%, whatever. You look at the statistics, quarterback 80%, completion, blah, blah, blah. He's great, but he's injured. He's not going to be playing. There's a backup quarterback. Now everything changed, right? That change, no matter what these odds are, that information's telling you that these odds don't really matter anymore because we don't have information about the backup quarterback. We don't know now what the real odds are. Now it's harder to predict, right? Maybe these 6 points that they're giving us it's not a gift anymore. Something else is happening. And it's my manual interpretation of an assessment of the information that needs to be entered. You can't just go by a number. Those are helping you out, but you need that, or otherwise, any kind of anything I could program in there, right, to pick up, that will be exploited. So you need that extra manual stuff, right, that a computer cannot just automatically do. So if you understand that, let's just take a look at, now I understand, I took a look at a bull spread in SPRT, right? Here's what you're looking at, SPRT, this is a bull put spread, and we're seeing some massive theoretical edge, right? 90% win rate.
Yeah, sure.
Right? Yeah, you whatever, you're using the presets, right?
That's
again,
correct.
The presets, they can't interpret, they're only looking at historical data, giving you historical odds versus present, but they can't do that extra step. So I'm looking here, all right, that looks good. But if I look at the call spreads, same situation, right? Bear call spreads. I could look at the SPRT, right? I could do a bullish play or bearish play, still massive edge. But what's going on here? Like, why is there, then I got to go figure this out.
Dimitri, the edge is not massive there on the bear side. Look at you got 9%. I'm talking 100, 140% on the put side.
Yeah, whatever, like 140%, whatever it is, right? There's no 140% win rate, but I hear you. you have massive edge, right? So let's just say you have massive edge here, right? Let's say you have, Team B has to win by 15 points. That never happened before, right? Team B has never beat anybody by 15 points. Yeah. But if I find out that the quarterback is out, the wide receiver is out, the running back is so now Team A fundamentally has changed, right? So correct. Even though this has never happened before, 15 points never happened, something has changed, right? Let me give you an example. The market doesn't go down 30% a lot, right? Not historically, it just doesn't. Maybe it happens sometimes, but it doesn't happen a lot, right? So if you just look at the course, but when we started hitting coronavirus and the news kept coming out, and you even had a chance, to assess that news, we're down big time. If you looked at it, because something's changed, right? Something's happening that you need to. It doesn't even matter that the market never went down 50%, right? But something's happened. Something's changed that can make it now go down because there's there's new information that doesn't exist. We've never had a shutdown in the economy, right? We can't say, oh yeah, well, you know what? We get these coronaviruses once a year. We shut down the economy, we reopen, but we're going to go down 50%. Then there's going to be a stimulus. We're going to go back. It's never happened. We're like on this unknown, uncharted territory, right? So those odds really at this point don't mean that much because the data's changed, the information's changed, right? And we don't have data on that. Just like we didn't have data on the coronavirus. The market went down, if you looked historically, it's never happened, right? But the markets just went down that fast, or maybe like one or two crashes like similar to that, right? So let me just show you, really quickly, I'm just taking a look at SPRT, like what has changed, and I looked at and this is, here's just a chart, like just looking at it real quickly. Here, like max. Like, look at this. This here is very unusual, right? In SPRT, like visually we could see it. We don't really need to even read the information. Something's going on. This is not this. Look at all this history we have, right? And then what's going on here, right? Like something's changed. Something's going on. Something's abnormal. Historical data doesn't know this, but something's changed. I can't just rely on those odds anymore, right? This is my job as a trader. This is my job as a person, managing, right, to check these things. But what's going on, and then I'm just kind of going here and like, what is this? Is it a takeover? What is this? Like, am I familiar with this type of news? And I don't know, like here, now I'm hearing closing merger with support that, something here is this, this isn't something we see every day. I got seeking alpha overvalue, I could go there. Like, what is going on with this stock? Like, why am I betting on more up, right? If I'm selling a put spread, even with theoretical edge, why am I betting that this thing is going to go higher? Like, I still need a thesis behind it, right? I'm not going to just do it, right? Even if the edge says, this is I still need to figure out what is my information here. Here they're saying it's overvalued. The stock has a big short interest, so maybe that's why it went up. There's a lot of covering. Here it's a hottest meme stock. Well, what does usually happen to these meme stocks? Company, if it merges, it's still 33% overvalued. And I don't even know. I'm just looking at these headlines, going, whoa. I got to think twice here. What's going on here? So the point I'm trying to make is that, yeah, you looked at a put that might have been looking like, whoa, there's, this is telling me there's a lot of theoretical edge here, right? Like these 15 points, but why, right? Why is what is the market telling me? What is the market signaling?
Sure. Yeah, and I get what you said. I get what you're saying there, Dimitri. But my point here is it's not just saying it's going to beat it by 15 points. It's doing it consistently day after day after day.
Because
the screen today.
Right, because it will continue to do that. It's supposed to do that because it's looking at the historical data and saying that the market is still signaling something to you, Jake, right? The market is signaling something to you, and that's what you need to figure out. Like the market was signaling it to you yesterday, the day before, and it's still signaling it to you, right?
It's like if the entire market was crashing, right? There'll be, it would be showing signals to potentially get, sell put, sell put, sell put. They're looking good, but like you know, if you're,
but why exactly? Why? You know, what is the reasoning behind it? Is it justified, right? And you know, when we look at that, and look, you know, it's not just. And I told you, like, I looked at it, I'm like, I'm skipping that. I don't know what's going on. I don't know what this merger is about. Why is it overestimated? You know, why, you know, there's meme stocks involved here, potentially big short interest. Maybe they already covered. Now it's going to, you know, a lot of stuff going on here. The market itself is signaling something to you. I see this. It's unusual. And I don't know how to assess all this information quickly, right? Like, I would have to like really go deep in there and figure this out to say, well, really, you know, I don't know, the stock, it might not be good until $8 or $7, but I have no idea. But here, this is definitely, no matter what the signal's telling you, right? The market is signaling to you that, well, something here is unusual. Something here is, you know, the market is telling you like, whoa, you know, we know how it behaved historically. Something here is different. And you kind of, you need to make that assessment. The machine itself will not be able to do all that for you. It's just pointing something out to you, right? That it's pointing it out to you, and you got to be comfortable with this. You know, why am I getting long? You know, if I'm seeing this, you know, if I'm seeing, oh, sorry. If I'm seeing this, you know, and I'm selling put spreads, I don't know, somewhere in between, well, what is my fee? Because I got this really weird spike here, right, that I need to justify and going higher. You know, what's going on here? What is my thesis behind it? What am I comfortable with? You know, what am I seeing that maybe the market's not, you know, pricing in? But it's an important, it's a very, that step is more important than just scanning for the theoretical, right? It's then assessing the information in front of you.
Sure.
Right. So, you know, I think that the tools are there to help you. They're there to assist you, but ultimately, you know, it needs human interaction of then what are all the surrounding, what are the surrounding circumstances? What is the surrounding data? What is my thesis behind it? And now GSKY, you pointed that out. That one I liked. I don't have time, but again, that one I did do, you know, that one I thought was a good risk reward, you know, opportunity. And I did do a trade in there, but this one, for these reasons, and I'm just explaining to you, I looked at it really quickly. I looked at this. I kind of looked at the news, didn't, you know, I don't understand like whatever's happening with these meme stocks, the merger. I was like, I'm not really this. I had other things that I thought looked better, so I just skipped it.
Sure.
You know.
With that, the bell has gone off like 3 minutes ago, guys. This was a heavy conversation. Do we want to continue it tomorrow? For those who don't know, Jake does almost a bi-weekly webinar. We could do it on, Jake, you're coming on Monday, right? We could continue it on Monday or.
Yeah, next week, yeah.
All right.
Okay.
Sounds good.
Jake, thank you for the question, because the idea behind this is it's not about being right or wrong. It's about learning from experiences. And just to give you an idea, in my career, I had to do a lot of trades that were negative, that I lost money, to learn from experience how to improve going forward. It's part of trading, Jake. Like, that is trading, right? To learn what happened here, you know, how do I improve it? What were the signals that I missed? How do I maybe avoid similar situations or profit next time, you know, when I see something similar? But part of trading is learning from experiences, and you're not going to experience without doing trades, creating thesis, and then following the outcome, you know. And just to give you an idea, I probably, you know, some things before I even turned it to break even took me 6 months. There are things like that, where I had to keep tweaking and going back, or, what did I miss here? So that's part of trading. Any trading operation that's successful will know that and say, I need to learn, I need to learn from experience. I need that feedback. I need to do trades to get that feedback, to see how it plays out. And that is part of, so it's not about winning or losing on every trade. Is it, did you get something out of it that you could, that made you better going forward? Does that,
Yeah, I hear what you mean. I think it's a good feedback session. Appreciate it. So so thanks very much.
Yeah, thank you, Jake. Well, I thought it was a great question. It's a good example, and I don't think it's by any means a loser, because there's a takeaway. There's some takeaway from it. When looking at, like odds or setups, what are the other surrounding circumstances to check? And
so one thing's for sure is don't do a screen and that's all you do. Not that that's what you did, Jake, but you got to take everything into consideration, obviously.
Yeah, exactly.
And then even with that, you could be wrong.
You could be wrong. That's why you go back and then check, well, what did I miss? What was there? What did I miss here? What were the other circumstances? I'm just scanning. There's a merger involved here, the potential merger involved, potential, I don't know.
And by the way, no one does that stuff better than Jake, right? Jake's been around. I mean, Jake's got a sheet he puts all his trades on. He analyzes them before and after. So Jake does his research, so yeah. But there's a learning experience all the time. So there you go.
Yeah, agreed.
Yeah.
All right. Thanks very much, guys. I'll see you tomorrow. Yeah.
Awesome job, Jake. You get out there and trade and play with that daughter as you're trading. Awesome job, buddy.
Yep. Thanks, everyone. Stay safe out there. Have a good trading day and hope to see you tomorrow.
Trade in peace, chameleons. We'll see you tomorrow.